Alright, let's dive into something that's been making waves, literally and figuratively, in the global economy lately. Imagine a single choke point that could send oil prices skyrocketing, stocks surging, and your wallet feeling a little lighter at the gas pump. That's the Strait of Hormuz, and right now, it's at the center of a geopolitical tug-of-war. Here's the deal: the strait is essentially closed, and the fallout is rippling across markets. But what makes this really interesting is how it's not just about oil. It's about power, negotiation, and the delicate balance of global supply chains. First, let's talk oil prices. Brent crude futures jumped over $2, hitting $84.64 per barrel, and US West Texas Intermediate isn't far behind. Personally, I think what's fascinating here is the psychology behind these numbers. The market isn't just reacting to the closure, it's pricing in the uncertainty of whether, or when, the strait will reopen. Iran's demands are steep: end military threats, lift sanctions, and pay compensation. From my perspective, this isn't just a negotiation, it's a high-stakes game of chicken. If you take a step back and think about it, this situation highlights just how vulnerable global energy markets are to geopolitical tensions. Now, here's where it gets even more intriguing. Last week, there was a glimmer of hope that a deal might be near, and oil prices dipped. US petrol prices even dropped 9 cents, a small win for drivers. But here's the kicker: analysts are warning that this relief could be short-lived. Patrick DeHaan from Gas Buddy put it bluntly: if the strait stays closed, fuel prices could spike to record highs for this time of year. What this really suggests is that we are walking a tightrope, and every headline, every tweet, every statement from Tehran or Washington could tip the scales. What many people don't realize is how this situation is spilling over into the stock market. Oil and gas giants like ExxonMobil, Chevron, and Shell are seeing their stocks climb. On the surface, it makes sense. Higher oil prices mean bigger profits. But here's the deeper question: is this a sustainable rally, or are investors just chasing short-term gains? In my opinion, this surge is as much about speculation as it is about fundamentals. The market is betting on prolonged disruption, but what if the strait reopens sooner than expected? That's a risk investors might not be fully pricing in. Now, let's zoom out for a second. The Strait of Hormuz isn't just a regional issue, it's a global one. About 20% of the world's oil supply passes through this waterway. If you're in Europe, Asia, or even the US, this matters to you. What's more, it's a stark reminder of how interconnected our world is. A standoff in the Middle East can ripple through your local gas station, your retirement portfolio, and even the cost of goods you buy. One thing that immediately stands out is how fragile our systems are when just one piece of the puzzle is disrupted. Here's a detail I find fascinating. Despite the strait being closed, oil is trading at $80 to $85 per barrel. That's not panic pricing, it's hope pricing. The market is betting on a resolution, but it's also hedging its bets. This raises a deeper question: how long can this balance last? If negotiations drag on, or if tensions escalate, we could see prices spike to levels that make today's numbers look tame. Personally, I think this is a wake-up call for policymakers and businesses to rethink their reliance on such a vulnerable choke point. So, where does this leave us? For now, it's a waiting game. Enjoy the dip in gas prices while it lasts, but keep one eye on the news and the other on your budget. What this situation really highlights is the tension between geopolitics and economics. It's not just about who controls the strait, it's about who controls the narrative. And in a world where information moves faster than oil tankers, that's a battle being fought every single day. As we wrap up, here's my closing thought: the Strait of Hormuz is more than just a waterway. It's a symbol of how interconnected and how fragile our global systems are. Whether you're an investor, a driver, or just someone trying to make sense of the world, this is a story worth watching. Because the next chapter could rewrite the rules of the game. What do you think? Are we headed for a resolution, or is this just the beginning of a much bigger shakeup? Let me know in the comments below.